Good morning, good afternoon, good evening, depending on the location you are watching me from. My name is Dunzo Onwordi of Dunzo Laurel Accountancy Tutorial. In my last session, I dealt with marginal and absorption costing theoretically, and it was dealt with at length. Today, we'll be treating it practically by performing some computation to differentiate how these two systems work. We can recall that absorption costing deal with costs by their functions, and marginal costing deal with costs by their behavior. So I will use a simple example today, which might take a whole time or all this board to complete, but it will kind of draw out this intricacy, the system, or what you need to watch out for or look out for when you are carrying out those computations. So the simple question here I'll pull up now. I hope you have all yours in front of you. I'll be extracting some information from here onto the board to assist some of you who might not have it in front of you. Company A started its business 2015. The following is a cost card for a product they manufacture. Cost card. Cost card is where you find all the cost elements involved in production per unit. And then sometimes you put the selling price per unit, okay, on the cost card. Let's do that. Cost card. So we're told that direct material per unit is £5. So cost per unit so direct material £5. Direct labor is £8. Variable factory overhead per unit £2. Fixed production overhead £5. Remember from my last lesson, all these variable elements we call prime cost. $15. Now we add the factory fixed production overhead of £5. Fixed production overhead of £5, which gave us a total cost of 20, called the standard cost and standard production cost. Production which I call full cost. Let's do it properly. Of 20. So standard production, which is full cost, £20. All right. The fixed production figure has been calculated, all right, on the basis of budgeted normal output of 30,000 units per year. Field production overhead incurred in the month 3 was £15,000. Selling, distribution, and administrative expenses are fixed 10,000 per month, variable 15% of the sales value. Selling price per unit is £50. Let's put that selling price into our cost card. £50. All right, selling price £50. And they said actual production, actual fixed cost paid, or fixed cost actually paid in the month 3, 15,000. Okay. The number of units produced and sold were: production 2,000 units, sale 15,000 units. We are required to prepare absorption and marginal costing income statement for month 3. So that's the question. So where do we start from? First of all, let's format a table. I'm going to use 1/3 of this board for the marginal costing and the other third for the absorption costing. The working has taken the last 1/3. So I will say our absorption income statement and the marginal income statement. All right. The key to watch out is absorption and marginal. So let's start. Let's deal with absorption side to the bottom line profit. Then we look at the marginal. So we are told that sales is 1,500 at £50 per unit will give us 75,000. The cost of sale need to be deducted from here to arrive at gross margin. So cost of sale under absorption, it will be dealt with using the full cost per unit. So as this is the we are not told if there was any opening stock, so our opening stock will be 0. Our production, we are told that 2,000 was produced, 2,000 units at £20 per unit equals 40,000. Now total 40,000. Okay. But we only sold 15, meaning that closing stock is 500. Let's close the stock then. With the 500 times 20, 10,000, giving us 30,000 cost of goods sold. I will identify this, I will mark this as A and this as B, so that I know the figures I need to add or deduct. Under absorption costing, we have to consider what we call over or under absorption. Over, under absorption. This is because we want to know whether we have actually absorbed all our costs in production or not. So we start with from our plan. We plan to absorb at £5 and we produce 2,000 units. So plan equals 2,000 units at £5 equals 10,000 units, 10,000 pounds. But actual equals 15,000. We are told they absorbed, they paid 15,000 fixed overhead for the month. Actually paid 15,000. So under absorb, because they didn't absorb enough, 5,000. I will call this C. When we now deduct A and C from A, deduct B and C from A, we get what we call our gross margin. So, what do we have here? 75 minus 30 minus 5. We have 40,000 margin. Which is A minus B minus C. After getting to this point of 40,000 margin, we now have to deduct the other function, which are the selling, distribution, and administration expenses. So they are fixed of them fixed, less selling, distribution, admin, okay, fixed the same 10,000, variable is 15% of turnover, they told us, which is 15% of 75, which equals to, do that, 75 times 0.15, 11,250, sorry. Altogether, we give about 21,250. 21,250. Trying to squeeze it in. 21,250. So knock this off from the 40,000. Give us 18. 750. Now the profit under absorption costing. Okay, so that's it for the statement of income under absorption costing. The turnover less the cost of sale less under absorption of 5,000. That gave us a margin of 40,000 pounds less the other function, which is distribution, administration, and selling. Two of them together give us 21,250. Knock it off from the 40,000, you get 18,750 profit under absorption costing. All right, that's it. So let's see what we're going to find out under marginal costing. So under marginal costing, let's go straight away. The same turnover will be the same, 75,000. The difference will be in cost of sales. Cost of sales. The difference will be here again, because opening stock is nothing again, opening stock. Production will be based on the prime cost, which is the variable element. So the 2,000 times 15, 2,000 times 15, which is 30,000. Give us 30,000. Now let's open in stock and closing stock. Again, only 1,500 we are sold out of 2,000, leaving us with 500 unsold, and again at 15, which is a variable element. Okay, so now give us 15 times 500, 7,500. So cost of sale will be 7,500 out of 30, 22,500. See? Yeah, 22,500. Now we got the cost of sale, B. B is still my A here, B. As marginal costing deal with cost by behavior, we need to bring all the variable costs out of the above the line. So there's variable element still outstanding in my equation, which is variable 50% of sales. So less variable admin, distribution, selling, which is 15% times 75. It was I think we got 11,250. 11,250. So I call that again C. Call that C. So when I now deduct all B and C from my A, it will give me the contribution towards fixed cost. Contribution towards fixed cost, which will now be 75,000 minus B 22,500 minus C 11,250, which is 41,250. That's my contribution. So this is contributing towards reducing my entire fixed cost. So my fixed costs are now fixed costs are first of all 1 or whatever. My first fixed cost there was 15,000 fixed overhead cost actually paid, and fixed overhead, fixed production overhead, let's OH represent overhead. Let's note OH overhead, which is 10,000 and 15,000 paid, and then fixed admin, selling and distribution 10,000. Give me a total of 25,000. Okay, so I call this E. Okay, E. This is now E and F. My profit will now be E, which is contribution, minus F, which is fixed cost, minus 25,000, which is 16,250. That is my profit under marginal costing, as opposed to 750 under absorption costing. Okay, I hope this is the steps I took. I hope they are clear. If you don't, go over it again, play the video as many times as you need to get it right. Practice makes perfect. So the under absorption 18,750, under marginal costing 6,250. These two figures can be reconciled from the absorption to the marginal costing statement profit. But this I will do in my next lesson. So watch out for my next lesson, where I will perform the calculation necessary to reconcile this profit from the absorption costing to the profit to the marginal costing system. So if you enjoy what you've seen, give us a thumbs up. All right, click the subscribe button, and please do share for others to enjoy this hard work we put together to help people understand calculation involving absorption and marginal costing. Until then, I will say nice watching, and thank you.